Hey everyone, welcome back for another deep dive. You know I always love getting into the weeds with AmiBroker. And today, we're tackling a really interesting function, ApplyStop. We've got a translated transcript of a Thai YouTube video that walks through this. I think a lot of traders want to get this right in their strategy. So let's see what kind of gold we can uncover.
Yeah, ApplyStop can be a powerful tool.
But
Yeah.
it's not about predicting what the stock's going to do. It's about knowing what you're going to do when the stock does something.
Right, so it's less about trying to be right about the market and more about having a plan.
Exactly. Let's say you've got a rule. If this thing drops 5%, I'm out, no matter what. That's hard to do when you're watching the stock ticker.
Oh, yeah, for sure. You always think it's about to turn around.
Right. But ApplyStop. It executes that plan automatically.
So it's like having a robot trader. That's completely emotionless.
Yeah, exactly. You're taking your emotions out of it.
Okay, so this video focuses on using ApplyStop specifically for selling. It lays out three main scenarios where this function is really useful. The first is what they call sales signals. Are those just your regular indicators, the ones that tell you it's time to get out of a trade?
Hey, you could think of it like that. Your primary signals.
Yeah.
Maybe a moving average cross or a breakdown in momentum, whatever your system uses to tell you to get out. ApplyStop automates that exit.
Okay, so no more second guessing yourself. When you get that signal, boom, you're out. Got it. And then the next one's stop triggers. Those are all about, I'm guessing, limiting those big losses, right?
Yeah, that's your safety net. You're deciding ahead of time how much you're willing to lose.
So like a percentage drop.
Yeah.
Or a key support level that once broken, you're out.
Exactly. You set that pain threshold up front, and AmiBroker handles the rest.
Wow, so even if you're, convinced it's going to rebound.
Right, it takes the emotion out of it.
Okay, interesting. So we've covered sales signals, we've covered stop triggers. What's the third scenario for selling?
The third one is better opportunities. Sometimes you might sell even if a stock is doing okay.
Really? Why would you do that?
Well, sometimes a much better opportunity comes along, and you need to free up some capital.
Ah, I see. So it's not that the stock is doing poorly, it's that something better is out there.
Right, you're always looking for the best place to put your money.
So we're not just managing each stock on its own, it's all about optimizing the whole portfolio.
Exactly. That's a key takeaway.
This is making a lot of sense. ApplyStop is about automating that whole decision-making process for your entire portfolio.
Right, and that's huge. Because consistency and discipline can be really hard to maintain.
Oh, I know it. Okay, so we know AmiBroker has all these different stop types for different situations. The video talks about stop loss, stop profit, NB, and trailing stops. I'm already getting a little overwhelmed, to be honest.
Yeah, there's a lot there.
So where do we even start with all this?
Let's break down each one so you can see how they work. We'll start with stop loss and stop profit. The most common ones. It's like you're setting boundaries for every trade.
So with stop loss, you're telling AmiBroker, okay, if the stock drops below this point, I'm out. I'm limiting my losses.
Exactly.
Yeah.
And the stop profit, that's like saying, hey, if it hits this price target, I'm happy with the profit, let's sell.
So you're locking in your gains. Okay, that makes sense. I'm starting to see how this works.
Right. And then there's NB,
Yeah.
which stands for number of bars.
NB.
Now this one sets a time limit.
So like a deadline for the trade.
Yeah. You can think of it that way. Let's say you set NB to 20. AmiBroker is going to sell that stock after 20 trading days, regardless of the price.
Yeah, that's interesting. So even if it's going up, you're forced to get out after 20 days.
Right. It keeps you from holding on too long to something that's not really moving.
I like that. It's like setting an alarm to reevaluate the trade.
Exactly.
Yeah.
Forces you to make a decision.
Okay. And then the last one, trailing stops. No, those are a little more complex. Yeah, I was wondering about those.
Trailing stops. They help you ride those winning trades and maximize your profit.
So as the stock goes up, your stop loss point moves up with
Yeah,
it.
exactly. It's
Yeah.
a safety net that follows you up.
Okay, I think I'm getting it. So you're always locking in more profit as the stock climbs higher.
Right. You're letting your winners run.
Yeah.
But you've got that protection in place.
That's really cool. Okay, so we've got stop loss, stop profit, NBGL, and trailing stops. Each one with a different purpose, it seems like. The key is knowing which one to use and when.
Exactly. And the video goes into a lot more detail about how to fine-tune all these settings.
I bet. It seems like there's a lot of nuance here.
There is. Even experienced AmiBroker users can trip up on some of the finer points.
Oh, I'm sure. The video starts talking about stop modes and amounts. And it's clear that, a small mistake in your code can have a big impact.
Oh, absolutely. You have to
Yeah.
really understand how AmiBroker is interpreting your instructions. That's
Yeah.
learning a new language.
Right, you got to get the grammar right.
Yeah, exactly. The video gives a good example. With the percent stop mode, if you choose that mode, your stop around has to be a fixed percentage.
So you can't just throw in a calculation there, even if it makes sense to you.
Right. AmiBroker might not understand it.
Okay, starting to see why. The video recommends studying that ApplyStop section in the AmiBroker guide.
Yeah, the guide's your best friend.
It seems like there are all these hidden rules
Yeah.
and nuances you have to be aware of.
There are. It's not always intuitive.
Okay, so we've done our homework, we've got the code right, but then there's the whole issue of backtesting versus live trading.
Ah, yeah.
And I have a feeling that's where things can go wrong.
You can have the perfect apply stop setup in a backtest. But if you can't execute it live,
Right when real money is on the line.
exactly, it's not going to do you much good.
And let's be honest, things move fast in the market. You can't just pause everything while you're calculating your trailing stop.
You can't. That's why. The video's advice to keep it manageable. That's so important.
Yeah, if your settings are too complex,
You're just creating more work for yourself.
it's almost a paradox. You've got this tool to automate your trading, but if you automate too much, it ends up being more complicated.
Right. It's about finding that balance.
Between control and automation,
Exactly.
and then there's the issue of volatility, which the video also mentions.
Right. Volatility can throw a wrench in things.
Like a fixed stop loss percentage might work for some stocks, but not for others.
Right, especially if the stock's really jumpy.
That's where ATR comes in, right?
Average true range. Yeah, that could be helpful.
So instead of a fixed stop loss, you're adjusting it based on how much the stock's been moving. So
Exactly.
you're giving it more room to breathe before you get stopped out.
You got it.
Okay, so ATR isn't just some abstract indicator. It's a tool to help you make smarter decisions.
Absolutely. And that's what I love about this.
Yeah.
We're not just learning the mechanics of apply stop. We're seeing how it connects to the bigger picture.
Right, we're getting strategic here.
Exactly.
So it's not just textbook stuff. It's about using these tools to navigate the real market.
Yes. And speaking of real-world applications, the video brings up another important setting,
What's that?
the reentry delay.
Ah, yeah.
I was curious about that one.
It's all about preventing you from jumping back into a trade too quickly after getting stopped out.
Because you might just get stopped out again,
Right, exactly.
especially in a choppy market.
Especially in a choppy market.
So you're basically telling AmiBroker, hey, I need a cool down period.
Exactly. Like, I just got burned. Let me think about this.
And maybe avoid making the same mistake twice.
Right. It forces you to take a step back.
This is really helpful stuff. I'm starting to see how apply stop can be used to manage risk, automate decisions.
It brings a lot of discipline to your trading.
Yeah, it's like having a set of rules
Yeah,
that you actually stick to.
exactly. Now remember, we've only covered some of the basics here. The video goes into more advanced settings too.
Things like valid from and valid to. These let you control when your stop rules become active after you enter a trade.
Wow, this is a lot, but it's so cool. I need to go back and rewatch this video and really study the AmiBroker guide.
I think that's a good idea.
It's a lot to absorb.
It is.
But before we go too deep, I'm curious, what does the video say about common mistakes people make with ApplyStop?
That's a great question. Because even with all this information, it's easy to make mistakes. Yeah, the video actually, it highlights some common pitfalls that even experienced traders can fall into.
Oh, I'm all ears.
One of the biggest ones is not testing your settings thoroughly before you go live.
Yeah, that makes sense.
It's easy to get excited
Yeah.
about all this automation and forget to do your due diligence.
Right. So backtesting is key here.
Absolutely. AmiBroker has some great tools for that.
So you can see how your ApplyStop rules would have performed in the past.
Exactly. You can run your strategy through different market conditions, see how it holds up.
That's like a test drive for your trading system.
That's a great way to put it. You want to kick the tires a bit
Uh-huh.
before you hit the road.
Make sure everything's working right.
Exactly. And don't just test it in a bull market.
Yeah.
You got to see how it handles the tough times too.
Right. The choppy markets,
Yeah.
the downturns.
You want to be prepared for anything.
Okay, so backtesting is crucial. What else should we watch out for?
Well, the video also talks about keeping things simple.
Especially when you're first starting out.
Right. It's tempting to get fancy
Uh-huh.
with all these dynamic stops and multiple conditions.
Oh, yeah. I can see myself going down that rabbit hole.
It's easy to get overwhelmed.
So start with the basics. Stop loss, profit target,
Get those working smoothly.
and then maybe add more complexity later on
Exactly.
as you get more comfortable.
Remember, the goal is to make your trading easier.
Not harder.
ApplyStop should be working for you.
Not the other way around. That's a good point. I don't want to be spending all my time stressing about my settings.
Right. You want to be focused on the big picture.
Making good trading decisions.
Exactly. And that's why I love how the video ends.
How's that?
It says, mastering ApplyStop is about taking control.
Not giving up control.
You're still the pilot.
But ApplyStop is like your co-pilot.
Helping you navigate.
I like that analogy.
It makes it so much clearer.
So it's about using these tools to enhance your own decision-making. It's not just blindly following them.
Right. And that leads to a final thought. For everyone listening,
Okay, I'm listening.
think about your own trading. Where do you struggle the most? Where do your emotions get in the way?
Good question.
Could ApplyStop help you in those areas?
Yeah, I think it could.
I think so too.
This has been a really great deep dive. I've learned so much about ApplyStop,
Me too.
and I'm excited to start using it in my own trading.
That's great. I hope everyone who's listening feels the same way.
And don't forget, the AmiBroker guide is a great resource for more information and examples.
Yeah, definitely check that out.
Well, that's it for this deep dive. Thanks for joining us.
Happy trading, everyone.